Markets rolling after China tariffs pause and surprising inflation progress. New bull rally or bear trap? So markets strongly rallied this week after China tariffs were delayed for negotiations and better than expected April inflation, setting the S&P up 5%. Let's recap. After weekend leaks, Monday kicked off up 3% with the US-China tariff truce. Similar to other countries, the US and China will be delaying their massive tariffs on each other for 90 days. Markets are rallying, but the trade war has just reset back to early April without the retaliatory tit-for-tats tariffs. Then Tuesday was our first look into April inflation, with core CPI coming in better than expected. Markets continue to rally, bolstered further by a Saudi Arabia AI deal. Wednesday cooled off a little as markets digested the news and rallied. But then Thursday got another inflation shocker with core PPI down 0.4%. However, it may be more of a wash after December through March was revised higher. Markets were a little mixed to start Thursday, especially with Walmart's higher price warning, but still ended higher. And finally, Friday saw some weaker preliminary May consumer sentiment data, but markets rallied anyways to finish green for the fifth straight day. So what's next? As we mentioned on Monday, we're encouraged with the warming US-China relations, but we still see the current tariffs as inflationary. We were surprised with the limited inflation impact on April, but we agree with economists cautioning higher prices are still on the way. Next week will likely be a bit slower, but we'll have a slate of Fed speakers on tap. Amid the market euphoria this week, rate cut expectations have slid with September the new target. We'll see what Fed officials have to say about it. We'll also see what impact Moody's Friday's after hours US debt downgrade has on sentiment. Cautionary or ignored? We'll see next week.